Hello everyone, welcome to JIIB Prep. I hope you all are doing great, and in this particular class we'll discuss about unit number 27, documentation. In this particular unit we'll understand what is the need for documents, what are different types of documents, and what is the documentation procedure. We'll wind up this class by checking your progress and doing some practice questions. So, when banks give loans, they do not rely on trust alone. They rely on legally enforceable documents. And this documentation, particularly, is a core part of the credit management in banks. So, these documents act as a proof that borrower has taken the loan, the borrower has agreed to pay the loan, and the bank has legal rights over the security. Bank has the right over the security which has been offered. And there are some key laws governing loan documentation in India. To name a few, Indian Contract Act. So, Indian Contract Act provides the rules about valid contract, void contract, consent, minor contract. So, contract with minor is void because minor is not competent to contract. And then we have other laws like Partnership Act, Companies Act, Indian Registration Act, Limitation Act, Indian Stamp Act, so on and so forth. So if the bank do not follow them, the document may be invalid in court, making the loan recovery difficult or sometimes impossible. So, for example, if a bank signs a loan agreement with a minor for buying a car, it is void ab initio, meaning to say void from the very beginning under the Indian Contract Act, unless it is for basic necessities. So, the bank will not be able to recover the loan given for purchasing a vehicle unless it is necessity, of course. So, what are the needs for loan document? Loan documents serve multiple functions. Number one, they identify the borrower. So, borrower identification. Now, when I say borrower identification, they ensure the person or entity taking the loan is clearly identified. The name, the address, ID proof, all these are taken. So, secondly, uh, we identify the security. Record details of the asset pledge as security. Example are the property details, gold description, FD number. Then a written record showing the bank gave money to the borrower. So, this is a written evidence, written proof or evidence. The documents establish borrowers and guarantors legal duty to repay. So there is a repayment obligation. The ensure repayment obligation. Then they enables the bank to file a case and recover money in courts if the borrower defaults. So legal enforceability is there, and uh, the documents creates a charge on security. It gives the bank the legal right over the pledged or mortgage assets until the loan is repaid. Then we have different types of documents. In particularly, we'll understand about DPN, bill of exchange, agreement in forms. Uh, Demand promissory notes are meaning to say borrower promises in writing to repay the bank on demand with the agreed rate of interest. So they must satisfy Section 4 of the Negotiable Instrument Act. Section 4 particularly defines the promissory note. So they are used when no fixed repayment is mentioned. no fixed repayment is mentioned. So they are particularly used in this scenario. Uh, the stamp duty is fixed across India under the Indian Stamp Act, and they must be paid before signing. DPNs can vary for fixed or floating rates, single borrowers or joint borrowers, joint and several liability. So the customization is particularly available. With respect to execution, they must be fully filled in, stamped, and signed before being valid. Bill of exchange is a written order from the borrower to pay a fixed sum to the bank or its order. So this is an order to pay. Agreements, they are detailed contracts stating all the terms and conditions of the loan, and with loan reference. So Indian Contract Act is the reference law for agreements. It contains loan amount, interest rate, what will be the penal interest, margin percentage, repayment schedule, bank's right on default, detail of the securities, and the stamp duty varies from state to state. Stamp duty varies, and in DPN, the stamp duty is fixed across India, but this is not the case with respect to the agreements. Then we have different types of agreements like pledge agreement, hypothecation agreement, term loan agreement, clean loan agreement, guarantee agreement, interest agreement, so on and so forth. Last but not the least, forms. So forms are supporting documents. They are not promises or contracts, but they shows the intention, the borrower's intention. So this is the main purpose of uh, the forms, to give instruction or authorization related to documents. They show borrower's intention. For example, authorization form, payment instruction form. So they particularly show borrower's intention, and the purpose is to give instruction or authorization related to the loans. Then we have documentation procedure. Documentation procedure includes all these steps: selecting of correct set of documents, stamping of documents, amount of stamp duty, filling, execution, legal procedure, keeping documents valid, safekeeping, and preservation of documents. So let's understand each of them, starting with selection of correct set of documents. So it depends on the type of loan, whether it is a cash credit, term loan, um, or a overdraft. Again, then the type of security, whether it is pledge, hypothecation, mortgage, and who is the borrower. So is it individual or a partnership or a company? So it the selecting the correct form of set of documents actually depend on these three things. Now, banks have pre-printed forms with built-in options for various cases, and staff must ensure correct clauses are selected in order to avoid the legal issues. Number two is stamping of documents. So, the purpose is the proof of paying stamp duty, which is a government tax. Indian Stamp Act of 1899 requires uh, that the documents should be stamped. The key sections involve section 17, 18, 19, 35. So section 17 states that document in India must be stamped before or at signing. So they must be stamped before or at signing. Section 18 states that document made abroad must be stamped within 3 months of arriving in India. Section 19 states that foreign bills or promissory notes must be stamped before acceptance or payment, and section 35 states that unstamped documents are invalid in court unless the duty is paid and the penalty is paid. So unstamped documents are invalid unless duty and penalty, which can be up to 10x is paid. Then we have types of different types of stamp, like stamp paper, government printed papers of specific value, adhesive papers. They are stuck on pre-printed forms and they must be cancelled, so they cannot be reused. So there is a cancellation rule, section 12. Section 12 says that if they're not cancelled, the stamp is treated as unused. So if not cancelled, stamp is treated as unused. Then we have stamp duty. Stamp duty is like a tax paid to the government on certain types of document to make them legally valid. Some documents have the same stamp duty all over India because they are covered by central laws. So the stamp duty is uniform across India. So the promissory note, bill of exchange, share transfer, deeds, receipts, letter of credit, insurance policies have uniform stamp duty across India, and then there are other documents which have different stamp duties in different states because state have their own laws for them. Example, hypothecation, pledge agreements, power of attorney, lease agreements, mortgage deeds. Uh, So particularly which state stamp duty applies. So the state where the document is first signed or the transaction is completed, uh, their stamp duty applies. And if the document is unstamped, you can still use it and as evidence in court after paying the extra stamp duty plus a penalty. All right. Why it matters? So if the stamp duty is not properly paid, the document might be rejected as evidence. And since the stamp duty law change, bank must keep themselves updated. Filing. So filling. So banks use printed forms using with blank spaces. These need to be filled in before the borrower signs them. The key points with respect to filling involves you have to fill every blank space exactly as per the loan sanction terms. You never leave blank or blanks or leave multiple options without cutting out the ones which are not applicable. Once the borrower signs, the document is final, so no changes can be made without their written consent. You should avoid overwriting if you make a mistake. Don't overwrite. Draw a line through the wrong part and write the correct part neatly, and you have the borrower sign next to the correction. uh, you have to fill the whole document in one sitting and with the same ink, same handwriting. Otherwise it might look suspicious, like the bank have added things later. So filling is done. Then you have the execution of documents. Execution means signing the documents to make them legally binding. The signature must match the loan application and the specific signature which is already present with the bank. They must match. If signing is on behalf of someone else, you have to mention their capacity clearly, whether they are partner, trustee, director, guardian of the minor, what is their capacity, you have to clearly mention. And if the borrower is a minor, only guardian can sign for them both as themselves and on behalf of the minor. Normally, bank makes the borrower sign every page. So every page has to be signed, right? Reason being, the borrower cannot later say that they didn't know what was on a certain page. That's why bank made them sign every page. If there are corrections in the document, they must be signed fully by the borrowers, and execution must happen in presence of bank official. The bank keeps a record in a register with date and time of signing, details of the document signed, and confirmation that contents were explained in a language which is understood by the borrower. And again signature of two bank officials are there. Legal procedure after execution. So this is basically signing. So what is the legal procedure after signing? So some documents need extra legal steps after they are signed. Otherwise, the bank may lose its right over the security. So for loans to limited companies, certain forms must be submitted to ROC when it is with respect to company. The forms must be submitted to registrar of companies after taking charge over the company's assets. So this ensures that the bank's claim is officially recorded. For registered mortgages, the mortgage deeds must be registered with the registrar of assurances within 4 months of signing. If not registered, the bank may lose priority rights to recover its dues if other creditors comes in. So if these legal steps are missed, the bank's claim might be treated as unsecured and the documents might not even be allowed as evidence in the court, keeping documents valid. So loan documents have an expiry date for taking legal action, and this is known as limitation period. Now this limitation period is governed by Limitation Act of 1963. The limitation period expires. The bank cannot take legal action to recover the dues unless fresh documents are signed. Limitation period varies on the document. For DPN, it is 3 years, and for mortgage, it is 12 years. Um, if you want to extend the limitation period, then there must be an acknowledgement of debt before expiry. So, get the borrower's written acknowledgement before expiry of the period. And if the borrower pays a part of the loan before the expiry, it extends the period. So, the part payment proofs must be signed by the borrower or the agent. The limitation period has already expired. So, fresh documents must be signed, or section 25(3) can be used of the contract act. So, the borrower can make a new agreement, new written and signed promise to pay a time bar debt. So this creates a fresh cause of action, right? And mere acknowledgement of debt is not enough. So a mere acknowledgement, this is not enough. And mortgaging property in exchange for a time bar debt is valid because it's like paying through the property value. Safekeeping and preservation of documents. So loan documents are valuable proofs of the bank's right, and they must be stored safely for many years. Why is it important? Because if the borrower defaults, the bank needs these documents to recover the dues. So we have a strong storage requirements with that the documents should be kept in a fireproof and theft-proof cabinet, and they must be keep under personal custody of an authorized official. No unauthorization is allowed. So the custody should be with authorized official. If the person in charge changes, there should be a formal handover process. Now, for how long they should be kept? What should be the duration? So until all dues are fully recovered, and even after recovery, you should keep them for a legally required period. So, as a modern practice, instead of keeping documents at each branch, banks now store them at central hubs or nodal points for a region or a zone. Now, let's check your progress. As per the Stamp Act, the document executed in India, they must be stamped before or at the time of execution. So, D is the correct answer. Which one of the following statements is not true? The court can condone delay in filing suit as per Section 5 of the Limitation Act. An agreement is not stamped before or at the time of execution in India. The defect can be cured by paying penalty when the borrower acknowledges the debt before expiry of limitation period. The period of limitation is extended by one more period. If the borrower makes part payment into the loan account before the expiry of limitation period, the period of limitation extended by one more period. So these three are correct. B is correct, C is correct, and D is correct. So these are true. Leaving us statement A. So even if we don't know what is the correct answer, we can eliminate it. So A is the correct answer for this question. Now let's do some practice questions. Which of the following statements are correct regarding documentation process in credit management? Documentation ensures that borrower's identity and security are properly identified. So this is correct. Non-compliance with legal provisions may not affect the enforceability, so it affects the enforceability. So that's why this is not correct. Proper documentation entitles the bank to take legal action for loan recovery if the borrower fails to repay. So this is also correct. 1 and 3 are correct, making option B as the correct answer for this question. Which of the following statement about loan documentations are correct? A DPN is used when a fixed repayment period is not specified and it is signed by the borrower to repay the loan on demand with agreed interest. So this is correct. The form of DPN varies depending on the type of interest and number of borrowers. So this is also correct. The stamp duty varies from state to state. It is uniform and not it does not vary. Agreement such as pledge or hypothecation agreement are used to outline the terms and conditions of loan. So this is correct. Forms are used to specify borrower's intentions, such as authorizing a bank to make payment to a supplier from the loan proceeds. So this is also correct. So 1, 2, 4 and 5 are correct, making option B as the correct answer for this question. Which of the following statement is true regarding the documentation and stamping requirements as per Indian Stamp Act? The choice of documents for a particular loan facility depends on the nature of the facility, the type of borrower and mode of charge. Yes, this is correct. Pre-printed forms of documents can be used for any type of loan facility without needing customization. So this is not correct because pre-printed forms require careful selection based on specific loan type and the borrower. So customization is required and hence not correct. According to Indian Stamp Act, all instruments executed in India must be stamped before or at the time of execution. So this is correct. An instrument executed outside India can be stamped within 3 months after it is first received in India. Again, this statement is correct. If an adhesive stamp is not cancelled, the document remains valid for use without any penalty. So this statement is not correct. So if the stamp is not cancelled, then the instrument is treated as unstamped and it cannot be used. So statement 1, 3 and 4 are correct, making option C as the correct answer for this question. Which of the following statements are true regarding the documentation process in banking? The stamp duty for documents like promissory note, bill of exchange, share transfer, receipt, letter of credit, policy of insurance is uniform across all states in India. So this is correct. Stamp duty for these documents are uniform across all states in India. Blank fields in pre-printed format of documents should be left unfilled to avoid confusion in future modification. So blank field should not be left unfulfilled. So this statement is not correct. Any alteration should be carried out by cutting and rewriting the matter uh, to ensure clarity. So it should be written in unambiguous manner. It should be clear. So this is correct. The limitation period for recovery of debt can be extended by making part payment of the loan before the expiry of prescribed period. Yes, this is correct. If the documents are executed without alterations, the full signature of executant is not required to authenticate the changes. So alteration must be authenticated with full signatures, right? And then that's why the full signature is not required. So this is not correct. A banker can legally act on documents even after limitation period has expired as the documents are properly filled. So no, if the limitation period has expired, then you need to execute the fresh documents. The bank must maintain a register to record details of the execution of documents, including date, time, signature of the two officials. So this statement is correct. So 1 is correct, 3 is correct, 4 is correct, and 7 is correct. 1, 3, 4, and 7. Option A is the correct answer for this question. Under section 23 of the 25 subsection 3 of the Contract Act 1872, what is required to revive a time bar debt? An acknowledgement by witness in court, so mere acknowledgement is not enough. Written and signed promise to pay either in whole or part by the debtor. A payment made uh, for a partial amount without any written acknowledgement, so written acknowledgement is also required. A court ruling on the time bar debt. So option B, a written and signed promise to pay either in whole or part by the debtor. So this is the correct answer for this question. Thank you for watching this session. If you have any doubts, don't hesitate to reach out to us on our Telegram group channel, JIB CIB Prep. We'll meet again with unit number 28. Till then, please take care and do revise your concepts.